As we head into Thanksgiving break, there's only three sectors in particular which are safe havens for those of you that prefer buying the dip or you're a long only trader. Those three sectors are the healthcare sector, that's sector number 1, the energy sector, that's sector number 2, and consumer staples, sector number 3. These are the three places to be looking at for volatility setups where you should be trying to find some volatility trades if you're looking to buy the dip. Take advantage of an existing strong trend and join that market pulse, join that market stage. Now, inside each of these three sectors, we had different opportunities today. Now, what's interesting is most of the trades inside of XLV were short side setups. Take a look at Medtronic, Abbott, Johnson & Johnson. If we take a look at this on our chart, I'll show you Abbott, for example. We had price action rally in the morning, and we breached our volatility box models for a short side entry. This rally makes sense because, again, that's part of XLV. XLV is a sector currently in the market stage of acceleration. We have this bullish bias naturally. So if you did take this bearish fade, you're going against the overall longer term trend. Different story that it worked beautifully, but it is a contrarian trade. So just like that, Abbott, Johnson & Johnson, these were contrarian trades. If you wanted to find trades in which you were joining the overall trend and you wanted to buy the dip, XLE, XLP were the places where you were offered opportunities. Inside of XLE, take a look at XOM. XOM was an opportunity to buy the dip in a place where the sector is still bullish, but we're getting an early morning sell-off instead of a rally. So take advantage of that intraday volatility opportunity in an otherwise strong sector. So XOM, good example of buying that dip, and that dip overlaps nicely with the pullback to the market pulse line for a continuation of this bullish market pulse trend. So XOM, good example. We come back to our scanner, another sector, still in accumulation, so flirting with the line was consumer staples. So take a look at some of the trades inside of consumer staples. You had Coca-Cola that breached our scanner this morning, and you take a look at Coke, a setup that is very much recognizable, especially for those of you that are seeing our V-shaped reversal course. You had all of the criteria met here with the 5 Keltner channels, the edge signal, and the momentum crossing. This is the kind of setup in which you have the overall sector trend that's agreeing, and you let the scanner do the heavy lifting of finding exactly where you have these volatility setups. The scanner updates real time throughout the day. You can use it to try and find opportunities using the daily models, the hourly models, ones in which we're following the trend, one in which we're going against the trend. If you even want to find some counter trend trades with high probabilities, you can use the scanner to do that. And you can use the dashboard as that roadmap to help you figure out which sectors do you want to be long, which sectors do you want to be short. Again, to recap for long side setups today, very clearly XLV, XLE, XLP. XLV, most of the setups that triggered, even though we wanted to be buyers, were short side setups because of the early morning strength. XLE, XLP were the two sectors in which you actually had buy the dip type of setups. XLV had the contrarian type of trades with the Abbotts of the world. I hope you found this video helpful in understanding how to use the market overview section to help navigate which trades, which symbols you want to focus on the live scanner. Take care, everyone. Good luck trading. If you have any questions, feel free to send us an email. Otherwise, we'll see you in our next update. Take care.